Good morning. Welcome to Business Lens on Rapid TV. I am Faith Stafford Joseph. And yes, of course, as usual, we get to share with you all the news and information regarding what's going on in the world of business, the economy, and finance. And today we have some very interesting headlines for you. Talking about OPEC trying to raise production. We're going to talk about that. They had a 9-minute meeting. That was very interesting on Sunday to talk about that. Between Saudi Arabia and Russia, they agreed to raise production. So we're going to talk about that, what it means for Nigeria especially. I know that we've spent a lot of time talking about Dangote and Pengassen, so we're just going to very quickly skim over that today, the latest update where that is concerned, right? And then we're also going to go on to talk about business confidence in Nigeria. There's a report detailing what that means, and it seems to be an optimistic view from businesses, regarding the structure right now. So what does that entail? That's also another headline we're looking at. Another headline we're going to be talking about is the capital gains tax. That's a conversation that is definitely trending. And what does it mean? We'll get to break it down for you here, and so many other issues that we'll look at today. But as usual, I do not get to do this alone. I'm here with Mr. Daniel Effa, who is a financial global market analyst. Welcome to the show.
Good morning, Faith.
Okay. I hope you had a lovely weekend.
Yeah, fantastic weekend.
You had a fantastic. Okay, good. I don't want to ask you why, but so let's just move on. Let's talk about OPEC, right? So what we know now is that OPEC or OPEC Plus, they're talking about raising production. What is very interesting is that, with OPEC is always about trying to balance between costs and supply, right? And sometimes you feel like costs is more important to OPEC sometimes than the supply. But we've seen in recent times that there has been a push to increase production. There's been a lot of production costs in the past, and now they're trying to push past it. In fact, there was supposed to be an increase in production between May and September, but a lot of countries were not able to make it, right? So now we're seeing OPEC trying to push past that. But we're also seeing oil price internationally settle at about $69, $70 per barrel or even lower. So that is a problem. What it also means is that oil producing countries are not making as much as they should. So trying to now introduce more supply, is that going to help? Especially seeing that costs is hovering between the $60 and $69 per barrel. If we introduce more and there is more supply, prices can go down even further.
Okay, so what we're seeing from OPEC, because of the significance of the cuts, of the increase, then it boils down to not just the prices. Maybe it has to do with a demand, a constant demand that needs filling, right? So we understand the fact that OPEC since 2018, 2019 has been very effective when it comes to managing the conversation around supply and the prices, right? And whether we like it or not, prices has been relatively low this year. I think we just crossed about 70 just about some weeks ago. We've not really, so we would say the average price of crude in 2025 has probably reached $62, $63 per barrel, and now it's at 65, right? In fact, with the announcement of the increase in production, suddenly the prices have even done a bit, maybe like $1 or $2, just because of that. So I think it's more of a technical issue, not necessarily looking at the pricing at this moment. It might necessarily be maybe because of certain members that needs increase in production. And I think that is what that particular production increase is more about than what the prices are saying.
Oh, because there's also the reports that for some OPEC producing countries, they're even unable to reach their quotas. Some of them have issues already. I mean, you see that Nigeria struggled a lot. I mean, we're finally starting to do good.
Throughout the year. This is just about 2-3 months.
We're finally starting to get to the point where we can actually meet our quota and maybe even surpass it a little.
Funny enough, if you look at the figures, we've not met our quota because when we say we are producing 1.6 million barrels, 200 is around targeted exactly. So I still at 1.4. So until we are doing 1.7.
Yeah, but the last report says that we had about almost 1.7.
So that is when we consistently do 1.7, then we have met our quota. So if we touch it just once and still struggle around 1.6 million, we are still not maximum. And that is one of the reasons why OPEC is looking at. There are two markets, right? There's a non-OPEC market and the OPEC market. So the OPEC members should ensure that they are doing optimum supply in terms of their own customers, in terms of the demand from their customers. There's Russia, there's non-OPEC members. So if you do not supply adequately, these non-OPEC members will take over your market. And that is the whole idea why, no matter how you look at the pricing, you also need to look at the demand, which is what I think OPEC
I mean,
is
137,000 barrels per day, which is really small. It's almost insignificant.
3% or 4% of what Saudi Arabia produces. So
it is insignificant. But one of the countries that pushed for this is actually Saudi Arabia, that has been feeling the brunt of the cuts. Like, okay, we've done this enough.
Yeah.
Can we move on now? Can we start producing more? Russia is a bit more on the let's restrain supply a little more because of cost for them, because they feel like, well, if supply is kept at a minimum, then they're able to, because of all the sanctions and all of that, they're able to make maximum profit,
True.
you know, on their crude. But let's also talk about the fact that Nigeria has just signed, NNPC has just signed this 2-year deal with Dangote to supply the refinery with crude. And it's not just Dangote, with other modular refineries as well. So what it also means is that Nigeria needs to do a lot more than a 1.7 to be able to supply domestically and still sell internationally and still pay a forward payment. So Nigeria should be looking at cutting at least almost like a 3 million barrel mark. Yeah,
even though we are able to do that, the problem is that whatever you do from the ground is what OPEC records, right? So even if you are supplying your local, because your local market is still part of the global entire conversation. So what we should be doing is that when we start getting to the point whereby 1.7 million barrels is not a norm, like it's not a normal thing, like it's the baseline. We can now start pushing for OPEC
to raise our
cost, because we've not met our cuts for 3, 4, 5 years. So we can then have that leverage to actually do that. But until then, I think let's just stick to what we have and try to meet up with at least do a 6 months straight supply conversation around 1.7. Then we can now say, okay, this is what we should be doing with OPEC.
Okay, so let's quickly skim over what's going on with Dangote and Pengasyn, right? Like I said, we're not going to dwell too much on it because we've talked about it, you know, quite often on the show. But let's look at the fact that one of the things that Dangote was proposing was that they were going to be able to, they wanted to pay these workers that have been laid off 5 years salary. You're telling them, well, we'll keep paying you for 5 years. Do whatever else you want to do, but don't come to the refinery. We don't want you to be here, because Dangote is like, I am more concerned about sabotage than about paying you. I mean, according to other sources, they're even talking about the fact that the government representatives were saying that 5 years is a tough financial burden. Dangote was like, well, it's better for me to pay them than for them to come in and sabotage me from the inside. But Pengasyn, they don't want that. They want to remain on the inside. I mean, I don't know if that is something that, you know, it's not a bit suspect. You know, Pengasyn, they're saying that, oh, workers should be deployed to other parts of the Dangote business instead of being paid to not come to work with Dangote. Like, they're going to be paid. Isn't that a good deal?
It is not, considering the fact that they're professionals.
But they can find work somewhere else. Just get extra money.
You know what? You're under contract. Who would want to employ? Because then Dangote can suddenly just wake up and sue, because they are still under contract with him. So for the
they're going to have an agreement. The government is going to be here, so it's going to be signed. So there's nothing to sue. So
Pengasyn is more concerned, because then they are no longer Pengasyn employees as soon as they are not working actively in a refinery. Do you get? So the conversation with Pengasyn is more about get these people to keep doing what they are experienced about, what they know how to do best. So I think the issue has escalated, and at this point, everybody is just looking at how it has gotten to a point whereby Dangote is right by saying, I don't want them back, because you have to also look at the risk involved bringing them back in, right? However, my worry is still sacrosanct, in the sense that this might start an approach by big businesses or big corporations to let staff go and start looking and start solving the issues after that. Because if there were issues they actually did do wrong or do right, apart from joining unions or anything, it would make sense. If it has to do with their work, right, then it would justify.
Well, that's Dangote is insisting that there's some sabotage that's going on. They're leaking secrets and things like that. I've got Otto Pengasyn is asking, can we get the proof of that? So there's that back and forth going on between.
So these are the issues that is coming after, because then the company had looked at it and let's just let them go. So why should
But why do you want to stay in a company that doesn't want you? Just go. Okay?
Exactly. And what's the rationale behind you just letting people go like that? That is where I feel we cannot afford to have a precedence, right? Dangote can say you can all go home, and nobody's questioning why you're sending them home. If it is it, are you downsizing because of your business capacity to employ more, or what exactly? Because then
they're saying, well, the sabotage, I would rather a few people leave than my $20 billion business be at risk.
And because
you're sabotaging me from the inside.
There are reports that foreigners were employed instead. Right.
And they're insisting that that is not true. They have over 3,000 Nigerian workers. So they say, I think it's about who the mediator is here.
And I think
bringing
that
the
is,
facts to the fore.
I think that in terms of mediation, there has been a big failure from the government. I don't know why, right? I don't know why the government has refused to really step in to have the conversation with them, because it should have made it easier. Because then both parties would have really given concessions and everybody would have gone. But this approach from Dangote is too aggressive. Pengassin is also replying with the best way they know how to respond, because they've lost as soon as those staffs were sacked and were let go. Any other thing after that is just trying to get it back, and it is almost impossible right now. The staffs have lost, they've lost, right? So what we can only do now, and that which is my worry, is we don't make this a precedent. We create whatever can be created, agreements, laws can be created, to ensure that this kind of massive layoff doesn't happen. Yeah, it does happen in different economies and all, but they are usually, this is the reason why we are downsizing. We're downsizing because this particular stuff is redundant, This is why that would make sense, you get, for kind of conversation. But they were just let go. At least I heard the testimony of a couple of them. They were just let go without.
But that can be arranged, right? Any company can decide to just come up with a reason why they're letting you go.
Okay, so now the concept is simple, right? If you're saying because we are two things. If you're a public company, we are losing money, right? Are you really losing money? And so then, if there is no conversation around you losing money, or you have develop a system, right, and ensure that you don't need this number of people. Those are reasons. If you don't have that, and it's just about looking at what's happening, letting go of 2,000 people and employ 2,000 people to replace them, that are foreigners.
Well, let me bring your attention to this.
Yeah.
A member of the Senate, who was also a former union leader. That's talking about Senator Adams Oshiomhole. He was on an interview on a national TV, and he was talking about the fact that, Pengassin needs to understand that this is bigger than just them. So the refinery itself is not even settled yet. The refinery has not been operating for even up to 2 years. And then all of these union issues are coming up, and then you're trying to ground everything and just scatter everything. This is something that is bigger than you, because it concerns the entire country and the energy security as well as profitability for even the country, when you're talking about saving FX, and things like that. But Pengassin is looking at it from that small prism of this is us. And he's saying, yes, I'm a union person, but why don't you have some sort of moratorium? Let this business establish, let it settle. Then you can now start pushing for your different needs and trying to ground everything. And he's saying that this is not working. And he was blaming union leaders for not picking the right fights. I mean, you're looking at contract staffing in banks. You're not even talking about that. I think Mr. Peter mentioned that, last week when we were talking about it. But all you're focused on is, okay, this is a big pie that is not yet established.
Okay, so so this is the thing. There are two ways to this conversation, right? Of course, he has been a union leader before, and even though I like his approach now, it's about 24 years after, but during his own time, he also grinds things to a halt. I can remember.
Well, he can see now. Hindsight is 2020.
I cannot count. I can't count the number of times we've done 10, 15.
Hindsight is 2020. You can see now.
Exactly. So. Those reasons are for, to me, if you are a union person, I think those reasons, maybe because it's in the ruling government, so it is, because then it doesn't make sense to me. Why am I saying that? You're saying unions should chill until business settles before they fight. This conversation did not start from. So when I started from NUPENG, so. And why did NUPENG? What happened with NUPENG? It was because he was trying to replace them practically. That's what it means in
No, he just told NUPENG. Hold on. He told NUPENG. He told them, you want to be a part of NUPENG, that means you can't work here. I don't want you to join unions. So they could have kept their job without joining unions.
So the thing is this. At the beginning, right, is at the beginning is where you really solve issues. You need to know where a certain business stands early enough, because if you don't start it now, in 5 years, same thing will happen. In fact, it will be worse. In 5 years, they're trying to join the union. The conversation will be, you didn't join in the first year, you didn't join second year, you didn't join in third year, but now fifth year.
Well, we're allowed the company to establish
it will always be an agenda as long as this is concerned. And that conversation around insecurity, if actually the refinery was that key to insecurity, as soon as this started, the government should have mediated immediately. We have enough people in government that should have done that. We have regulators, NUPRC, NDPRA.
They have state clearance.
Exactly. Even the NNPCL that is a partner to this business, state clear. The Minister of Petroleum, the Minister of State, come on. So if you did not say anything, that is meant to mediate that this business is key to energy security, how then do you expect two people that are fighting to suddenly just wake up and just say, okay, we are tired, let's just rest and solve our
We're thinking
problems?
about the country, the bigger perspective. That's what should take precedence here. Anyway, let's talk about some good news. Apparently, Nigeria's business landscape there's a very optimistic view where that is concerned. You're seeing current business performance index climbing up to 107.9 points, and that is according to the latest NESG Stanbic IBTC Business Confidence Monitor. The report is saying that businesses have remained in the expansion zone since December 2024. I remember that there was a report talking about how businesses back in December 2024 were very optimistic about 2025, and we are seeing that continuing, even in the last quarter of 2025, they remained on the expansion zone. Some not expanding as much as they should, but there is movement, and that just also shows that the macroeconomic reforms, as well as, the certainty when you're looking at things like currency, is helping with businesses. What are your thoughts on that?
Yeah, so I think that we're in the second phase of what we call economic resilience, right? In 2024 was the peak of it. I think the highest inflation figures, the highest volatility in exchange rates, highest interest rates, right? So as a business, you're looking at these figures and you're looking at it can't go as bad as this because we've gotten to that peak, right? So what will happen definitely is a period of decline. So what are businesses doing? Businesses are doing what we call, yes, we've been hit with the tornado already. So now what you need to do is to absorb it and now start looking at how to strategize to get better and now have quality systems.
Is the certainty helping?
So that certainty is basically what everybody is now, that is what is resurging, whatever, what's the word?
Optimism?
Yeah, optimism is there. And it's, of course, see how the year has actually turned out. And and that's why the figures kept on rising, because it shows that even going into the new year. Now, this is the third phase, and that's where the third phase is. It's like going to be declining rate from getting into the new year. Maybe 1 or 2 or even 3, right? And that means that for them, they've adjusted, they've suffered the losses, they've adjusted. Now they can now begin to take advantage of whatever opportunities comes into the new year, where there is a likelihood that there will be increase in consumption for them, and that is why everybody is betting on that level of optimism, and it's a good one. It's at least this is the first time I'm seeing a positive business confidence in over 4 years from 2024 up until now. So stability is key to what we are seeing now, and I think the next phase of growth, of actual building, is if you don't mix it up, we should be fine. But if we do, we're just back to where we were. And that is
but speaking about the recovery, there are sectors that are leading it. And what is very interesting, the agricultural sector is leading it. And considering the fact that in times past, we have seen agriculture not do as well as it should, even though it is one of the largest employer of labor in Nigeria. Yeah. So this is good news, because you're seeing agriculture start to rise from 95.6, to now 107.3. And you're seeing all the sectors actually showing growth. Whether you're talking about crop production, forestry, livestock, agro-allied businesses, they're all moving up the box. So that means that something has been done right.
Yeah, okay, so for crop production, for example, I think it's more about...
Season?
Not just the season. If you look at even the climate, even the weather in this period, the weather, I think this is probably the year we've had less flooding in recent times. So I think stability in weather conditions has also lifted optimism, right? Because then if we've had the right amount of rainfall required we get for the farming season, and that has helped, right? We've seen, for example, feeds due to exchange rate, feeds are supposed to also prices have stable, and people can now say, okay, can now begin to adjust to those prices, and so yes, the confidence is a function of stability on one side. I think the weather also has been, as far as agricultural sector is concerned, because when you look at GDP contribution, it has been nominally increased. So it is not like very extreme, but there is optimism. Optimism means that optimism definitely can translate into more business going into the new year.
Because I mean, one of the things that we certainly know in the world of business is perception is very key.
Yeah,
so if the people in the sector are optimistic, then it can also drive investments because they feel that it can get better, and that means that you can have more expansion where that is concerned. Services sector also shows a lot of momentum. Well, services, even in GDP figures, you can see it is growing. So that means that maybe more attention should be paid to that?
Yeah, so I think that services usually feed off real sector conversations, factories, industries, agriculture. So the bigger those, that is why I say a lot of our next phase of conversation should really be industry focused. If you can expand the industries the right way, you realize that suddenly services become bigger, more people are employed. Services alone can employ a lot of more people. The banking, the transportation, the logistics, they can employ a lot of people. So if you can solve the infrastructural issues and tend to look at industry-focused conversation. Agriculture, for example, should be doing times 10 of what it's currently doing. And if there is a need to set up committees, the same way we've done for taxes that has to be government revenue, let us also do this for economic expansion, right? So we cannot just go to meetings, we need the real on-the-ground improvement. That is what really drive this. And the truth is that because our agricultural sector is too big in terms of the capacity, the potential is too large, like we're underutilizing it by almost 95%. It means that you can imagine the number, the possibility in terms of the number of revenue that comes in, what people it can employ, more services that are connected to it. So the opportunity is still there if we can definitely explore.
And even manufacturing is expanding. It's at a slower pace, but it is.
It is expanding. Like I said, it's the second phase of economic resilience. If you are a manufacturer, you get of anything, right? It's fast-moving goods, anything. You've been hit with the worst crisis ever, right? So you have two options. You either go home or continue. And at this next phase, you start looking at, okay, how do I adjust, right? If it's just to reduce your workforce, increase the hours of work, you can actually adjust. For those fast-moving goods, you've seen them created smaller versions of the product, sachet versions of the product, just to survive, so that at the next phase, when every consumption becomes better, you start seeing them improve the product back to what it was before now, or change it entirely with new designs, new contents that will be cheaper in terms of cost of production for them.
Okay, so that's a good thing, and we're hoping that it's sustained all through. Exactly. This is the last quarter of 2025. So everything that could go wrong, I think is behind us for 2025. So let's see what goes into the new year, as well. Now let's talk about this particular report. This report is a bit confusing for me, so I'm going to, leave it to you to sort of break it down.
Okay.
There's a particular report talking about the Naira being overvalued 30% against the dollar. But what is also interesting about this report is that the report also is telling us that Nigeria's inflation should be much lower than it is currently. Actually, positing inflation to be about 12%, which is something that experts have argued that we're probably even over the 20% that is being pushed out by the MBS. So it's a little contradictory. Like, okay, so you think our inflation should be more, but should be less, but our Naira should be valued, is being overvalued by 30%. Let's break that down, about how this actually came about. And this is by Renaissance Capital Africa. They're the ones who put this together, saying that the Naira is overvalued by as much as 30% based on real effective change rate model, and they're looking at it and comparing it with what they think is real-time inflation figures, and also putting it side by side with high interest rates. Let's break that down. Okay,
so for you to actually say inflation, the currency, the exchange rate is higher, that means you're looking at the level of activity in terms of easing being done by the central bank per time, right? It's also a function of your import bills. So how much do you make in dollar terms, right? And how much of it do you really push into the market to actually stabilize the rate. And whatever figures they have, I've not checked their methodology yet, but the way economics work is they're always society to even statistics, no matter how you look at it. But if they are saying 30%, as much as 30%, that's what we are looking at, almost 1,800 or 1,700 in terms of what naira to dollar rate. Then that calls into question a lot of issues, right? Okay, is it that in the last 1 year, right, we've not had enough dollar to actually do what is right in terms of match supply.
Tax reserve is over 41 billion.
Exactly. So, except they're also factoring that in, that what we've made is not about money, there is really no basis for that, because if you look at our trade bill, right, we've exported way more in terms of naira terms than, right, so one way or the other we have enough, we've done enough exports this year, you get done imports. So those dollar surplus should count for something. So and based on the figure of CBN, around $1 billion or thereabout is spent on FX on a monthly basis, and I think we make way more than that to be able to actually keep that pricing going. So except I probably go through their model very clearly. The fundamentals don't speak. Of course, I've maintained the fact that I don't see 1413 as what's the word, as a good thing, right? Because if you're not exporting more, just make sure it is cheaper, right? But that is a function, that is more about what it does for the economy rather than the actual conversation around what the rate should be. That is way too controversial for me. And back to inflation also, similar conversations, very similar. How do you come up with that? When did you change your own model or methodology for calculating it? Because you cannot say inflation that was 28% suddenly gets to 12. Is it a function of the month by month conversation, or there has been a time that you feel like the inflation figures
according
was
to
not
them,
as
they said that Nigeria has been experiencing deflation, especially in food prices, and I'm wondering, where they got this report from. And then if you look at the fact that before being rebased, Nigeria's inflation was way over 30%.
Exactly.
So if you're looking at that, and then you're telling me that if you look at the component of CPI basket, Nigeria should be having a 12% inflation in October, 10% by December 2026. We should actually have a 6% inflation. I'm wondering how that, can actually be explained. But another part of it that is very interesting is that Nigeria's inflationary figures have had some sort of indirect linkage with, exchange rates costs. So if you're telling me now that exchange rates should be higher, and you're telling me that inflation should be lower, I'm wondering, how that works.
And those two components of macroeconomy have a linkage one way or the other. In fact, we can't say this one is not what the figures are saying from MBS. They're saying on the ground, right? You can say that prices have stabilized this year than what it was last year or 2 years ago.
Because of the currency?
Exactly, because of just the naira to dollar. Because when you look at the components of what Nigerians really consume in terms of food, a lot comes in, right? From fish, a lot of this and they've stabilized. Stabilizing doesn't necessarily mean deflation. It means prices are no longer rising as they should. So when you say deflation, that means that there will be negative growth consistently month over month. So it's a very controversial.
So what is that model when you are saying that even the MBS? So this is what the MBS is reporting.
More reason why it is difficult, because MBS is the only custodian of CPI basket data, right? Even if yes they made it public, which is even easier. So if they made the core raw data public, then how did you arrive at yours, except you calculated yours differently? And that's why I said it is important that I think when I read the report, I will be looking at at what points did they feel these figures shouldn't have been. So that gives us an idea, because then saying 12%, 10%, 6% is too extreme for the kind of.
I mean, the naira is not being viewed as one of the most competitive currencies in the country, but then at the same time that you're now telling us the naira is overvalued. So it's a bit.
It's just a report that maybe wants us to catch our attention and
attention cut.
Exactly.
All right, we're going to go on a very quick break. When we return, let's talk about what the CBN boss is saying about cryptocurrencies. That is very interesting, actually, because the last CBN dispensation had a different view, where cryptocurrency was concerned. And at some point with this new CBN administration, it was almost like they were going to toe the same line. And then now there seems to be a sort of walk back. So We get to talk about that. But then also, the biggest conversation is coming up, and that's talking about capital gains tax, which is what everybody's talking about. What does that mean for us? Stay with Business Lens on Rapid TV. We get to unpack all of that right after this. All right, you're still on Business Lens on Rapid TV. And yes, we have been talking about different headlines in the world of business, finance, and the economy. And I still have my analysts here with me helping us unpack all of it. Now, let's go to this story, which I know you'll be very interested in. That's talking about the cryptocurrency story, where the current central bank governor, that is Yemi Cardoso, has now called for a pragmatic and more collaborative approach to regulating cryptocurrency in Nigeria. He's acknowledging the rapid growth in the sector and says that there's a need for structural framework to manage its impact on the financial system. This is very, very interesting because he also now still, of course, made reference to the issues with cryptocurrency and Binance, and that she said that, you know, what happened was that all of a sudden connection became very difficult to get and people turned to cryptocurrency. And of course, he did not mention the underlying issues, but he's now saying that, well, they have seen the light. You know, the CBN is now thinking, you know what? We have to make sure that we establish a structured framework to manage and regulate this better. Of course, that is a silent way of acknowledging that they haven't been managing it better. But we have seen, you know, that SEC has always been, you know, at the forefront in trying to make sure that this is captured, this is regulated properly. The CBN is slow in catching up, but they seem to be now.
Okay, so I think one thing is, I think even though I because this conversation is a two-way conversation, right? Because when you look at financial stability, which is what the CBN is after, crypto, one way or the other, with its activity, if it is not well managed and controlled, can actually cause financial instability, right? In terms of the activities of investing, trading, get off cryptocurrency products, that is under the purview of the SEC, and SEC actively they have an active regulation in terms of its activity, digital assets. There is an active, and of course, it is still expanding as time goes on, right? But because of the angle of the financial stability conversation, which is what most central banks all over the world are trying to do, even though bigger economies, basically, it's just the SEC that does all those things, right? No, there's nothing that concerns them. But from time to time, you hear the central bank governors talking about cryptocurrencies. The angle they are coming from is usually about the digital currency, the CBD, the central bank digital currencies. That is what they are more concerned, because then we are looking at the crypto space. It just came here, didn't ask for permission, just decided to stay parallel to existing financial structure, right? So central banks and governors talk about it on the back of financial stability. Okay, do we have a digital currency also, so that we can have access to the way it works, right? So I think that what the CBN governor is acknowledging is fine, because it's okay that he's understanding the fact that, yeah, we didn't really understand it a lot, but we just wanted to calm the storm. Yeah, anybody can do that, but the approach did not show our approach of professionalism in terms of, okay, yes, we understand that this is a financial conversation and should be approached the right way, not. Yeah,
it was approached more politically than
exactly.
economically.
More chaotic than the right way should be done, right? Because if there is a criminal approach, there are enough bodies to solve that. So instead of going at it that way, because then whatever you did, right, did not stop.
Yeah.
The peer-to-peer system still works.
Exactly.
But the only difference is that, because of the stability you've added, the structure you've added, now everybody is playing in line. That was always what we complained about. That instead of fighting players in your ecosystem, because then it's an ecosystem. That means everybody is part of a system to help each other to make it faster. So why not just take everybody in, regulate them, control whatever, manage their affairs, and everything still. And it's the same thing you're having with the fintech banks. You still have that issue also, that they're like enemies when they should be part of an ecosystem working together to ensure financial inclusion and a bigger financial system. So what he also emphasized, which I also liked from the statement, was that, yes, we're also considering digital currencies, which now exposes the last cryptocurrency we tried to have, which is the INERA. So then, well, he said it's work in progress. Let's see what comes out of it, and let's see if we're going to even get a report of what we did with the currency, the INERA, and the effects we get, and the effect of what it has had on us, and what we are going to be doing differently from whatever
This time
we do
around,
in
we'll see. But they're working with SEC to make sure that there's proper, regulation. And he, of course, noted that Nigeria is ranked among the top global markets for cryptocurrency trading. Talking about statistics putting Nigeria as even number 2 in terms of cryptocurrency trading. That is something that Nigeria cannot miss out on. It has to be encapsulated in your entire financial framework.
Exactly.
All right. So now let's talk about this big elephant. And that's talking about the capital gains tax, right? So one of the things that has been a big deal, especially in this administration, has been how NGX has expanded and grown. We've seen the growth of the capital markets, maybe more than, a few other administrations before now. And, Nigeria tax law is coming into view January 2026, right? You know what is interesting about that tax law? This is on the side.
Okay.
Is that now that it is close to being implemented, you are now seeing all this little nuances that people didn't really focus on because of consumption tax and things like that, things that were not even as important. Now people are seeing the ones that are like, oh my God, we didn't know this was there. And now you are seeing the capital markets being thrown into some sort of turmoil because of this capital gains tax, which is being put at 25%. 25%. Now, this anxiety is coming from when clarifications. I don't know how clarifications is bringing anxiety, but Nairametrics is reporting that after Taiwo Oyedele, chairman of the Presidential Fiscal Committee, on tax reforms, he talked about how investors who sell shares and reinvest the proceeds in fixed income securities or non-equity assets will be subject to 25% of CGT. Now, you're having markets like, what is that? But one of the things that Taiwo Oyedele also clarified, I don't know if that clarity did anything, but he noted that retail investors will largely be unaffected, saying that the 150 million annual exemption threshold effectively shields 99% of individual players. But here's where this gets very tricky. If you're looking at the Nigerian stock market, we don't have a lot of retail investors. So what we have are a lot of people who come because of your interest rate. So we have FPIs, playing in the capital market. These guys are huge investors. So what you are doing, even though you are telling us now that retail investors will not be affected, the biggest players in your market that have made your market grow so fast, you want to tax them, you will send them away. How many retail investors do you have? Instead of cutting your nose to spite your face.
Okay, so this is a very, very. I've been in maybe 5 or 6 places last weekend, and I can't talk because of my opinion. I just keep quiet. I love to talk. People have been ranting, whether people in Nigerians in diaspora, whether Nigerians. It has been something else. All right. So first things first. Capital gains is kind of tax you charge or you get or you pay for proceeds of an asset naturally, right? But of course it is now spread towards shares. Right? Before it was just property. With the new tax laws, everything has been having an expanded net, right? So this is the thing, and I'm going to take 2 stands because then I'm just trying. I try to get the rationale behind it and action, right?
Why is that government needs money?
No, so we say that government needs money, right? That's why they tax. Taxes can actually achieve 2 things, apart from your other progressive equity, economic equality, and all those things. One of the 2 very pivotal things is, number 1, revenue. Number 2 is also to drive spending habit or consumption habit or drive certain policies, right? This particular action is a more policy-driven action. Why am I saying that? Of course, money will also come in. If government says we are putting a high import duty on cars, is to encourage local. But the idea is that, of course, we make more money from you importing. You get the cars, which we know you will do, right? But we are also trying to encourage. If it's very expensive, maybe you can consider the local alternative, right? So that is one way of, and that is what the state is doing, right? So why? It covers about if you have 150, less than 150 million, it's your capital gains. You are not going to pay tax, right? So that means that the focus is people who are above 150, right? Like you also cited, it is a very institutional focused market. It's almost like almost 70-30 in terms of the numbers, right? So it is not necessarily about to encourage anybody, because then how many of us are playing there? Of course, we because of the profits made this year, kind of numbers we've seen, because over 25 trillion are added to that stock market capitalization this year alone, right? It means that people are seeing opportunities there. Interest rate is still high. So you are seeing a lot of, based on real interest rates, right? Real interest rates, we're about 7%, right? So that is big figures. So all those fears of people running away, people are not running away. They're just angry. And
so you think a 25% CGT will not affect
now,
the market?
So now, this is the only issue I have. It's a very good thing, because all over the world, it's different figures. There's no
25% not high.
So what we've seen all across board, like in different countries, is segmentations, right? It ranges, varies. So different segments, you get different exclusions. For example, some countries will have more considerable figures for foreign investment, just to encourage them. And I think that is what I feel that this should also have. It should not just be poor and rich. It is, because then it is not just because people that are playing in your space are already rich. Most of them are rich. Most of the figures that will be affected. That's why a lot of people are complaining. I heard some people complaining a lot yesterday. This guy, we are more than. Yes. So what I was saying earlier about what I feel is the issue is the fact that it doesn't put in inflation adjusted fees plus currency exchanges. That because then, if it is starting from just 2026, it makes sense. It's historical. That means that people that have, if I've kept 1 billion in the stock market since 2010 or 2020,
you're going to
exactly. So
backdate it.
I'm saying exactly. So I'm saying that I'm taking out gains and I have to pay 25. And that is because then the dollar value has even probably.
So you're not taking into consideration inflation or currency depreciation.
Exactly. You're not adding all those, and that is where I have issues, because then these people are not making as much money as they would with these new laws, right? Because 25% for them is a big loss. Plus the depreciation they've already.
But let me ask you,
however,
the wisdom in this,
yes.
right? Like you say that because of high interest rates, people would not really run away; they'll stay. So you're saying that even though your markets has thrived because of these big investors, that most of them have over 115 million. If you're looking at it, because of your interest rate, they keep coming. You're saying that they would stay. Yeah. Even if you charge them 25% CGT, because the interest rates is too attractive. Okay, so when I was talking about earlier about the motive, so now one thing that we've identified is that we have a lot of FPIs, right? Yes. And FPIs, they come and they go. In fact, one of the rules is that they come and go. Like it's just like more like a hot money, basically.
It's more like a speculative space, right? So now, what this law is saying is that 25% will be taken out when you're actually pulling those things out from your whatever gains you've made, right? So you're trying to keep them in the market. Exactly. So you're trying to reduce speculation as much as possible. Stay longer. Stay long term. You'll be doing 1 year before, because in next couple of weeks you're going to be doing another pull out again, and our currency will suffer another level of pressure. Yeah, we want to reduce that as much as possible. But if you don't mind, at least we're going to save 25% of whatever possible pressure we would get from you. And that's why I said sometimes it is not necessarily about the money that's about to be made. So sometimes about where you want certain actions to be taken by the group of people that have been affected by the taxes. And that's what I think this is about. We would know. But that's not going to push them to the real sector. That's not going to transform the FDI. Of course, but it will keep the money for longer. Which is less pressure on our bills, right? So, of course, nobody knows how this will play out. But I know it will happen, right? That is down is certain. You don't think 25% is too much? Yeah, I feel it is. I don't feel it is too much, because when you look at comparative analysis, even Ghana is doing the same thing. It is global standard. Some people go as high as 40%. So, right? So your problem is the fact that they are now, tracing it back. Exactly. They're not saying also about that. So start from 2026. So that is where that is basically, because then if they do that, the fear about doing that is also is that 2026 everybody moves out in droves. But if you are starting historically, or it could have been since 2023, 2024, just to give an idea, because up until then the currency was stable, but as at then the numbers became bad. So you could have said, okay, pre-2023, and then exemption from 2023 to 2024, and then we pick up again in 2025. Exactly. Anyway, we'll see. And then yes, the government does need money. Of course. That's our journey curtain on the Business Lens for today. Thank you, as always, Daniel, for being a part of this conversation. We have the news coming up on the other side of the hour, so stay with Rapid TV.